All right, looks like we're live. Just a moment while we share our links. Thanks for joining us, everybody. Go ahead and share the link with anyone you know. We're going to be talking about some pretty important topics today, so I'll wait a couple minutes so people can get the link. Share it if there's anyone that you've been talking to about this topic. We're going to go over a lot, so let me just share out this link in my Telegram chat. If you're watching, share it too. And in the meantime, I think I got the link sent out. Let's check. What's up, everybody? All right, just a couple more people and then we'll get started. All right, welcome back, everybody. Welcome to Dipcatcher Radio. Usually, lately we've been talking a lot about Hex because there's just been so much excitement going on over there. But this week in some adjacent markets to ours, some true craziness was unfolding. This is big. I'm sure everyone knows by now that there was that incident with GameStop where a bunch of hedge funds were betting the price was going to go down, and so they were borrowing shares of GameStop to sell them to push the price down. And then some people on a Reddit thread called Wall Street Bets coordinated to pump the price. Everyone's just buying into GameStop. And when the Wall Street institutions were betting the price was going to go down, every dollar the price goes up, that is their loss. And apparently some major Wall Street funds experienced billions of dollars of losses as a result of the GameStop stock just absolutely pumping in price. And so they actually shut down the trading of GameStop and some related stocks on Robinhood. And so there's a lot going on there, which is pretty shocking to watch unfold. And it really highlights a lot of the weaknesses in the traditional financial market. And it also highlights a lot of the strengths that are just the default features of crypto. We've covered on this channel a lot in the past how what we've really seen unfold in 2020 is that there are plenty of cryptocurrency or blockchain native financial products that replace that are alternatives to some of these traditional financial products or traditional financial services. And Robinhood stopping the trading of an asset that where every dollar the price was going up, a major institutional fund was losing, millions of dollars. They lost, I think I'd have to look at what the total losses were. I don't even know if it's public, but losing billions of dollars betting against GameStop and then being out, just crushed by coordinated Redditors. It was truly a wonderful sight to see. And it actually, it can be kind of concerning, because it's hopefully not an indicator of what's to come, but I think the genie really has been let out of the bottle on this topic, and I think that this is going to really help lay the groundwork for why these crypto financial solutions that we've been covering on this channel, like it's their time to shine. Like this was like the real world has woken up to, it's like there's this like great financial awakening going on, and the world has woken up to just the current reality, which is the world is in so much disarray because the monetary foundation that everything is built on is just in shambles. Like you can't accurately measure the value of things, and that results in some craziness that where the downside is really only experienced by the regular people. The major institutions, they can get Robinhood to shut down trading, or they can get bailed out of trades that didn't go their way, and so it's really revealed a lot about the current financial reality that we find ourselves in, and it really paints it just like lays the stage out for crypto to really emerge as a legitimate solution to these things, which for the first time in history, there actually are alternatives. In 2008, when there was major financial calamity, there weren't solutions. Bitcoin hadn't been born yet. That was one of the things that kind of prompted Bitcoin along, but Bitcoin hadn't been invented yet. There was no Ethereum, so there were no smart contracts. There wasn't decentralized exchange. There weren't savings products or investment products or like yield generating products on that launched as coins on Ethereum. Like all this financial ecosystem that that's available to us today, that didn't exist last time there was like major financial calamity. And so between the market's response to the to COVID in 2020, and then now how the world is really seeing that the assets you think you own you really don't own, and they and that the same type of censorship that you see on social media is starting to trickle into the financial markets, which can be, it's fine if social networks, want to censor people, like that's one thing. But when you interfere with people's ability to price goods and price assets, it has a lot of negative effects to the rest of society, because the pricing of assets is the most important function of society, because it's how the market can communicate to itself to tell it what things to produce and how much of them and how much to charge. And so when you interrupt with society's ability to coordinate, that's when calamity is just introduced to to society, because the universal language of pricing, it really gets disrupted, and so incidences like with GameStop is just like another episode in this cycle of events that show maybe there are problems in these systems, and are even more reason for people to get acclimated with this, like the new financial reality that the people in the crypto ecosystem are building. So this is really important stuff. And so I didn't have anything prepared like I did last week for tonight, because this is happening in real time. But to kind of highlight what this is really what this all is really about. There's something called a short squeeze, and a short squeeze is when a lot of people are shorting a stock, meaning they're betting that the price is going to go down. If the price starts to go up, the people who are shorting need to close their position, and the way you close the position is you buy the stock, which pushes the price up even more. And the reason why there was so much energy for this GameStop short squeeze, let me pull up the chart right here. The reason why there was so much energy for this short squeeze is because these hedge funds had been loading up short positions where they're selling the price down, shorting it, because GameStop is a brick and mortar business. It's getting disrupted by digital. It's kind of like like Blockbuster was. It's like a store where you'd go in to get the disc when the new game came out. But now that most of the games are being distributed through like the PlayStation Network or the online stores, and they're all for download. Their business model is disrupted. Especially compounded by the pandemic. Retail is a shot, and so it's one that you'd think is going to go down, right? And so that's why so much was shorted. But what's so shocking about it is that GameStop short interest. When you look at the short interest, what was happening is that they had something like 140% of the total shares were held in short positions. So it's as if they sold 140% of the available shares, to open up these short positions. So that's done through a variety of ways, through actually borrowing the shares, to selling puts and different options that. So we don't need to get into the mechanics of the financial instruments they use to hold the short position, but effectively what it means is that there's more of the thing for sale than exists of the thing. So it holds the price artificially low because 140% of the total number of shares is in a short position, meaning it was lent to be sold. So it's as if 140% of the total supply was sold. And, so it's what it's the root of is just, this over leveraged environment that the financial system finds itself in, because interest rates are so low that they need to find yield in other ways and they need to take on more risk. And so they're loading up on the leverage, for one. And two, there's this whole other aspect, which I don't know if it was related to this in particular, but there's a whole concept of it's called rehypothecation. And let's just pull up the definition of that so we can get it really accurate. But effectively, what it means is that when someone is taking a massive position, like a massive short position, they usually need to post some type of collateral. And so with a lot of these financial institutions, when they're lending to each other, or they working through their broker to post, they could be posting some asset as collateral and then taking a position and then taking that same collateral and posting it again somewhere else and taking another trade. And so they that could have amplified some of this activity where, as the short is getting squeezed and a lot of people are trying to cover their position, they can't because, they might have already sold made free the collateral that was required for, them to take the position. And so there's so much compounding of inflation of these assets and just and the ability to manipulate prices in these markets, because there will be shares that exist on paper and then there are shares that actually exist, and sometimes the shares that exist on paper can far out exceed the shares that actually exist, and they can be lent and used as collateral, but also lent, and all these crazy things that just amplify the um, just like amplify the, it just makes it impossible to tell what's going on. And so it's just like ripe for manipulation. And the markets are never manipulated to help you. Like you as like the regular investor, like, even though you may benefit from the manipulation, maybe your bags go up. The manipulation does not serve you. Like what it enables a class of financial institutions to take massive risk, but not actually bear the risk themselves. Like they can take risk and earn the reward, but if things go wrong, they usually have a way out. And that was part of what might have been the case with the GameStop thing is that they were able to get bailed out by another hedge fund or another fund, which actually turned out to be the one of the main market makers for Robinhood. And so they claim to be out of the position, which they may not be, but even still, like GameStop is one of the most highly shorted stocks. And so the more shorts there are, the more energy there is to go to the upside. And so with GameStop, doing this, it's really hard to tell what's going to happen, because a lot of this first wave of energy, it's already spent. Like all the people that were going to buy down here, like they're probably maybe a lot of them are done buying. But it's still got this like meme effect to it. So like it could still go up, but who knows what types of like financial, tricks that they're going to play in order to, maybe bail out. Maybe this firm isn't the only one that was like majorly wrecked by this. Like there could be there's many other firms that are probably getting wrecked by this, because it was like one of the most widely shorted things. And so, and because it was, coordinated on Reddit, like out in public, like people in a public forum were making the case for why they were going to buy this. And then like they just, it caught steam, and then people kind of had a purpose for buying it, wanting to squeeze the hedge fund. And then like Robinhood stops the trading of the asset, or stops the buying. They didn't stop the selling, which was weird because like who are you selling to in that case? But they stop people from buying because what if kind of in the last in the last financial collapse, it was because like housing prices were going down. What if this next collapse is because the asset prices are going up? Or assets that, people had short positions in, people betting against these corporate raiders were like the only bit of yield left for them to make in like a zero interest rate environment is, squeezing poorly performing companies to death and then like auctioning off the graveyard, it creates that environment where that is the case. And because there's so much interlocking of, financial assets being used as collateral in numerous places, and like all this rehypothecation of these assets, and funds investing in other funds who are investing in each other, and like kind of like this circular game of speculation. This could be the one of the dominoes in potential global financial resettling. Because this is it's showing that there's a class of people that play under one set of financial rules, and then there's a class of people that play on another set. If you're trading on Robinhood or anywhere else, like you're the product, and you don't get bailed out of bad trades. But if you're like a major hedge fund and maybe have a lot of political capital, and maybe you have, a lot of favors to call in, and you also have the ability to like manipulate other markets, or cut some other deal, maybe you can get like some type of like emergency cash injection to cover your short, and like you maybe get a bailout from the government, or maybe you're able to get the main exchange where people are buying the stock to are trying to short squeeze you. You get them to be shut off. So there's like what it shows is that there's like two different classes of people, and you as like the retail small scale person, you have no advantage in their game. Like this is their game. It's not your game. And this actually, really paints the perfect picture, for crypto, and really, really emphasizes the importance of some of the things that we have that are just by default the feature. It's not like something we had to, it's just like that's just because of how it works. And so, even really across like a lot of the assets that we talk about, in similar fashion, kind of last thing on this like short squeeze topic, in similar fashion to how the GameStop stock was massively shorted, then there was this crazy squeeze where price ran like 100x. Another famously and this was done through naked shorting. Like they sold shares they didn't own. Like 140% of the shares were sold. You obviously can't own more than that, more than 100%. And another market that has been famously naked shorted is it's something that Trace Mayer was part of. It's the gold price suppression scheme. Trace Mayer is actually a lawyer that was part of this. And there's an organization called GATA, the Gold Antitrust Action Committee. And so the whole premise behind this is that there's, similar to how there's so much shorting of the GameStop shares and other like brick and mortar stores. There's massive price manipulation in the gold and silver markets that's been going on for decades. And the purpose of that is that they have they suppress the price of gold to make the U.S. dollar seem to be performing well as a reserve currency. It's like a way to hide like the real inflation. And so the way they do that is that in the gold futures markets, they're selling gold that doesn't exist. It's called naked shorting. So in gold it's happening, in silver it's happening, and that's always been known. Like it's not like a new thing. And some of the major financial institutions even paid a massive fine for participating in this, but it never really ended. And what we may see with, in similar fashion, where, the price is held down by naked short selling, we could see that in the gold market. So when we look at just like the price of a gold ounce, the true price of gold had been suppressed for decades, and so it's kind of held the price down. When you look at the chart of the monetary supply inflation, it's massive, but when you look at the gold price, like it keeps up with that, but not very aggressively. But if the price of gold, like this is another one that people are like aware of, that there's like massive overshorting. People could try to squeeze the gold market, in similar fashion, which would be pretty hard to do, because again, like this GameStop incident showed that like for the financial powers that be, if you're playing in the markets that they already control, like even like a coordinated short squeeze, or like on things that people are like suppressing the price of, like even that may not work, because like you could, they could just stop the market, say, yeah, no more buying, sorry. And there's really nothing you can do, because the core difference that this really highlights between these legacy financial markets and the crypto markets is that in crypto, the default behavior is self-custody of the asset. So when you buy your Bitcoin, like, yeah, you can hold it on, Coinbase, whatever, but it's always recommended that you take possession of the coins. You withdraw to a wallet that you control. It's more secure, less likely to be hacked, less likely to be stolen, less likely to be lost, if the company that operates the exchange goes bankrupt. So like self-custodying the asset is really, really important. And so, like that's like the default behavior. Whereas in the stock market, like you can't request, if you buy something on Robinhood, you can't request that share certificate. Like you actually legally can't take possession of the shares. And what crypto's taught me is not your keys, not your cheese. And so if you don't have possession of your assets, you don't own them. Like Robinhood owns them, and so that's like what's happening with GameStop really shows the importance of like self-custodying, your assets, because, like okay, in this incident, they shut down GameStop trading, so you couldn't buy GameStop, but what if, there's something going on, some like, big financial collapse, and everyone's trying to get out, and then they say, okay, Robinhood people, you guys can't sell. Nope, sorry. All this money that you think you have, sorry, you can't touch it. Like, other people get to sell before you. Like, you can, like, that is a total reality that can happen, like 100%. And so, this really emphasizes, not only the importance of like self-custodying your assets, but what Hex really popularized was the use of Uniswap. And Uniswap is a decentralized exchange. So everyone who, regular listeners know all about Uniswap, but for the new listeners, Uniswap is, how do we go to, so Uniswap is a decentralized crypto exchange where you can trade any asset on the Ethereum blockchain, and it doesn't require a counterparty. It doesn't require someone to custody your assets, and you can trade any asset for any other asset, and it can't be shut down. And so, things like Uniswap, which Hex really popularized, it was, like solutions like this exist, and it has massive volume. Let's see what the volume on and like the liquidity on Uniswap is, and this is just one of them. So it's got $3.4 billion of liquidity, $700 million of trade volume over the last hour. Like this is a big thing now. Like this is a clear alternative that's accessible today for trading assets. So not stocks. You can't trade stocks. You can only trade ERC20 tokens. But this is like a working example of what a non-custodial trading experience is. A lot of people, they only know Robinhood, they only know E-Trade, they only know, whatever, you name it, whatever broker they use. But the benefit of being in the crypto financial markets instead of the legacy financial markets is that there are options for self-custody, zero counterparty risk, no manipulation, in your trading experience, where you maintain control of the keys at 100% of the time. And so like this is like really like truly the solution to this incident, where from up on high someone called in and said stop the trading, and they did. This is the solution, and it currently only exists in Ethereum. Like this doesn't exist in Bitcoin. Bitcoin is a solution for the thing that gold serves, or the kind of like Bitcoin is like a reserve asset. It's like meant to be the kind of like the low risk one, even though it's gone up so much. Like Bitcoin really is like, it's meant to be a fixed supply money, and there can be all types of monies in the market. And I think one of them always there needs to be like a base that is the fixed supply one. And then from there, like there's other types of financial assets that exist, and they fulfill different functions. So Bitcoin is like one that you have for like a 4 to 8 year time horizon, where it's, it has these, like regular like boom and bust cycles as a result of the mining, expensive transactions, but it's good for very infrequent but large transactions because it's the most liquid. It's just like it's kind of like the bedrock. But then on top of that, like things that can go up and a lot higher in price can exist. So like Ethereum can also exist. Where it's kind of like, the Ethereum token has its own business cycle, but it's it's where a lot of like the Ethereum network is where a lot of these new financial products and new financial services are taking root. Like things like Hex, where built on top of Ethereum is Hex, which has a very specific long-term savings use case, produces yield kind of like a stock pays dividend or a CD pays interest, and it's entirely self-custody. The being locked is actually another layer of security because it can't be stolen from you or otherwise coerced. It's either you get it or no one gets it. And so, like there's all these different types of financial assets out there. And they fulfill different things that the traditional financial system currently fulfills. And every time there's some type of incident like this, I think it's a really good time to highlight that there are real alternatives to some of these traditional financial products and financial experiences in the crypto markets. We've got Uniswap for decentralized exchange, self-custody. We've got Hex for earning dividend, long-term savings. We got Bitcoin, for kind of like the kind of like your gold, something maybe you don't think of selling, but maybe you take it to a pawn shop and you extend credit from it as collateral. Like it's like a good form of collateral. And then there's Ethereum, which is very a strong network. Like by being in the Ethereum network, you have access to all these different financial services, and it is pretty So all this stuff is very timely, because and I think that like the big thing that that this really is awakening people to is that there are alternatives and people are willing to take big risk in order for big return. And I think the cryptos really are they fulfill that desire. People that get into crypto, like they're looking for big risk, big return. And because like through these things, like so many people, at least on paper, made a ton of money from this GameStop short squeeze, and people saw that it was all out in public. And like any opportunity there is to like buy something that either major institutions need to cover or something that they don't even have and they could be left behind at, like I think people really woke up to that the only way to really make an impact is putting your money up, getting skin in the game. And I think this is like a very effective form of protest, as opposed to other forms of protest that we've seen this year. Like this can actually drive change. Like you can wreck a major fund, and provided that the powers that be enable them to bear those losses, which they usually aren't used to. Like there's alternative ways to fight against oppression or mistreatment from institutions, and some of them allow you to make money while you're doing it. The people that participated in this short squeeze, they made money. The people that participate in Bitcoin or Ethereum or Hex or Link or any of these other coins, like any amount of money that you're taking out of those financial systems and putting into something that they don't have, you're drowning them of their resources and you're enriching yourself in the process. And so I think things like that have real strong potential for change, because there's real financial gain to be had. Whereas in other issues, they may be important to people, but there's just no financial gain to be had as a direct result from them. So I think things like this can really help pick up the momentum, and they're really showing they're really forcing people to ask serious questions about the assets that they're investing in for retirement or the money that they're saving. Like why is this money? Why should I be working for this money if it can just be printed? Or the value of all the things that I want are going up faster than the rate at which I can save and add more dollars to my savings. Like all the assets are going up, all the things that you might want are going up, but they tell you that, price of cell phones and televisions and, the consumer goods are going down. So there's no inflation. Like there's tremendous inflation, and it's, and it all just matters on what the things are that you want. Do you want good education? Then, that's inflating. Do you want good medicine? Good, that the price of that is inflating. Do you want assets? Do you want, real estate? That's inflating. Do you want cryptos? Those are inflating too. Literally, like every all these assets are inflating, and people are really starting, and they're seeing it play out right in front of them, and they're seeing crypto, emerge as an alternative, and so I think a lot of people are really, are going to make really big decisions. Like everyone's got to make their own personal decisions about kind of like how they arrange their finances. But, as time goes on, the crypto space looks more and more intriguing. Every time it doesn't die after, read an article, oh, Bitcoin's dead because this happened, it's, crypto's done. Like, and every time it just keeps pushing higher, and gaining more trust. All these things I think are really happening in due time, and I think it makes for a really exciting decade, for people who are, just getting started, early in their life, trying to build up, what they're trying to do. I think there's going to be wonderful opportunities on the horizon, and being in the crypto space, it really enables you to kind of be free of some of these issues that are going on in the traditional markets. Like no one on Uniswap today was shut off from trading. Not a single person. No one could stop Hex from making interest payments, and no one could stop Bitcoin from being mined. And, they stopped GameStop from being traded. I think TD Ameritrade said they're going to give more time for their clients to reposition after a crazy move. Like no one would even expect that in crypto. Like that's such a good part about being kind of native to it, is that like that's just part of the game. Like all these things, it's just part of the game. Because it's self custody, you have to bear that. There's like other considerations you have to make, and so. I think that people that have been like primarily in the cryptocurrency and like crypto financial space are actually going to have a massive advantage to people that kind of grew up in the legacy finance space, because, there's a whole learning curve to this, and the people that have been in it have a massive, massive advantage. And, a lot of people that are finally waking up to this whole notion of not your keys, not your cheese, and that, using a manipulated currency is just the same thing as using a manipulated, stockbroker. Like people are going to, continue to move in a big way. Like earlier this year, we've, we saw the, big financial institutions, funny enough, moving into crypto. And I think this incident is, might push this next wave of, investment-minded people. They're on Robinhood. They see the crypto stuff there, but they also, realize they can't withdraw it. Maybe things go wrong there. They just don't trust it, and then they start breaking out into, the Uniswaps. Getting Bitcoin. Taking possession of it. Getting Ethereum. Getting Hex. Getting other ERC20s, and. This is, in due time, it's all part of the, the onboarding cycle. There's not companies behind these things. Like, it all happens from pure, just like the market has a need, then there's, a solution presented to fulfill that need. And so I think that the need for an alternative financial system is, is very, very clear, and it's right in front of us. This stuff already exists. So yeah, let's look at the chat to see if anyone said anything. If only we can convince Wall Street Bets to pump Hex next. Yeah, dude. I mean, shit. They've got some sway right now. We'll see how that continues to last. I hope they do. Because hex, is like, it's not something that's massively shorted. So I think that's really what those people are kind of going after. They want to just do a big short squeeze, and so ultimately those will run out. But in a way, like hex has kind of experienced a short squeeze. All the people that were like fudded out, like they're not actively shorting hex, but not holding hex is like shorting it. And so if price continues to run, then maybe like they'll get like squeezed, like, oh shit, well, maybe at like $10, like, whatever you name, whichever hex hater is like fine, like they capitulate. Like that's kind of a short squeeze. So maybe we might see some of that because we've had some gatekeeping before, and GameStop was experiencing some gatekeeping. You made your point with Dogecoin and GameStop. Now make your point exiting all together and pumping hex. Yeah, I mean literally like the people in hex are doing just fine. Like all this calamity does not apply to hexagons. Like when you're staked in hex, it's like you're in this like serene like God galaxy brain mode where like nothing matters to you. Like you are just so elevated because every day you're earning interest, every day your coins are locked, like all this stuff, like it doesn't even matter to you. So yeah, good point. Exit everything and buy hex. That's not that is totally a good thing to do. Like if you told me you're going to do that, I would vehemently agree with you and say boss move. Like you're on. Like you know what's up. Oh yeah, that's a boss move. Make me wonder what the OA would do if they came in and pumped the price 1,000% a week. Yeah, literally, like what if because here's the thing with Uniswap is that the way that the way that the pricing mechanism works, like on Robinhood, it's like there's buyers and sellers, and there's market makers who are like filling orders. So Uniswap is kind of like that market maker, and so where the price is based on how much money you're putting in and how much money is in the liquidity pool. So what you can look at here is, let's look at the pairs. Let's just pull up the hex one. So I think all of the liquidity in hex is in the USDC pair. Yeah, so like right here's an example. So there is $2.5 million of liquidity in hex. And so there's 169 million hex and 1.3 million USD coins. And so when you buy hex, you're depositing USDC and you're taking some of this hex. So this number goes up, this number goes down, and now you have the hex, and now the liquidity pool has that. And so the price adjusts because now there is more dollars and less hex. And so the way that that Uniswap sets the price, it's called a bonding curve, and it's just like it's just an equation. So the Uniswap bonding curve So the Uniswap equation is, let's see. Where's like a simple... I'm trying to find the equation. Uniswap bonding curve. Okay, so here, this is just a picture of it. So like, there's this curve that, based on how much you put in, like to the trading pair, is like what the price moves to. So pretty much like let's look at this. If you doubled the amount of, like, so right now there's $1.33 million of USD coin in here. If in a single order you came in with $1.3 million, you would 4x the price because you 2x'd the amount of dollars in the liquidity pool. And since this is a squared function, you will, 2 squared is 4, so the price will go up 4x. So all it takes in the hex market is, $1.3 million to push the price from, right now it's at like 0.08 cents or 0.8 cents. You push it up to like 3.2 cents with $1.3 million in a single order. And so all that happens right here in public. So like this is a list of all the trades. Like you don't see this on anything else. And so you this is like the key difference between Uniswap and Robinhood is that all the trading happens fully in public right here. And you can go in and dig into the transaction. So and you can see okay, it went from Uniswap router to the Uniswap router. Another, so it routes through. Ultimately, you swap the, 13 USDC on Uniswap for 1,650 hex. So this transaction, you have proof in the blockchain that this happened. And so in Robinhood or even on centralized crypto exchanges, you can, you can't see what's going on. But on the decentralized exchanges, it all happened, the price is set based on that bonding curve, this equation, and the transaction history is logged right here, and you can see exactly who it was trading. You can, look in here, okay, so from this address, let's see what's going on over there. Okay, so this person has only $13 of hex and $9 of Ethereum, and you can see that, that was their first transaction. They got some hex. And so all the trades are fully public and transparent. And because of this, it makes manipulation that much harder to execute because the market becomes aware because every single thing is in public on the blockchain. And so these exchanges as an alternative to, centralized exchanges, it just gives you a little bit more assurance that there's not funny business going on that is, manipulating your ability to trade. Because on exchanges, what's known to have happened on exchanges is that they go on the chart and they'll do what's called wash trading. It's where they place fake buy and fake sell orders back and forth amongst themselves so that you can't tell what's going on. So maybe it'll print what they'll do is they'll make the chart look, paint some chart pattern, and then everyone's oh, it's going to go up. They'll load everyone up, and then they'll squeeze out their own customers and just make money liquidating them. And so that's been known to happen in crypto exchanges. But this new class of decentralized exchange, it makes that almost impossible because it's not a company that is making this market. Anybody can join this pool. Anybody can be the exchange. In this case, you can be Robinhood. You can be the one, you just post an equal amount of hex and an equal amount of the other pair, and you can be part of that market and earn some of these trading fees. And so these alternatives are here. And so, it doesn't take much money to push the price up. Eventually OA power will get diminished. So many hexagons, I love it. Diminished, and think the goal is to eventually hand off hex to the hex community, always protecting the product until it can't anymore. Yeah, who knows? No expectations. OA is definitely a really strong, holder in our economy. And, you're right. Over the time, its power will get diminished, especially if it's not staking. I want to do a video about this. I want to see, looking at the current wallets that are out there that aren't related to the OA, could, maybe the question is when could a 10 million hex bag, exceed the OA? Say the OA never stakes. Could a series of 15-year stakes make your bag as big as the OA at some point? Maybe we'll talk about that in another stream. Maybe the Elon Musk jumps in. Yeah, maybe hex is the right currency for Mars. It's got the color. Maybe, how long does it take to get to Mars? 15 years? I don't know. That might be too long. But, how cool would that be is when you take off in your jet to Mars, and by the time you get there, your stake ends. And then, where you enter your stake, you get on your, here, let's look it up. How many years to Mars? How long does it take to travel to Mars? Oh, it's only 7 months. Okay, I was thinking as much further. Okay, so 7 months to Mars. So, maybe 7 month stake. I don't know if I would do that short of a stake. If you're going to stake it all, do at least the average. But, Hex could definitely be a good, good form of money on Mars because of the interest it earns. And, you can make interest from, Earthlings, pushing the price up, and so who knows? Maybe Elon Musk will jump into Hex. This person says, I think people took loans out when Hex launched. Now they have to sell off to pay back loans. Yeah, I mean that's like what with that GameStop short squeeze. Like they took out a loan of GameStop and they sold it, and then now to close it out, they had to buy the shares back. And so yeah, I mean people. What he's talking about, Benny Blanco is talking about the, like what the sell-off could be. And yeah, I mean, a lot of people took out loans to buy Hex. When I played live poker tournaments, I knew people who would swap action with each other, and if they won a tournament, they'd have to pay back right away. I don't know what that means. Okay, jumped off the stream. Yo, Hexicans, are we the only sane, financially literate people in the world? Yeah, I mean, literally, like, the Hexicans are definitely a special bunch, really understand a lot of things about the world, Luckily, because a lot of Hexicans really aren't trading much, so, the thing with GameStop kind of doesn't mean much, but, yeah, I mean, I think you're right. They know that compound interest, the people that make it, what's that saying, like, rich people earn it, poor people pay it, and that's kind of, if you can stake Hex, you're earning compound interest. If you aren't staking Hex, you're paying it. Whether you hold it or not, you're paying the interest, believe it or not. Think about that. Dangerously Stupid says, crypto exchanges have halted trading before, not Uni though. Yeah, that's right. Crypto exchanges, they like Coinbase shuts down all the time, Arthur Hayes, I don't know if BitMEX has been shut down, but like Arthur Hayes was getting in trouble, Huobi got shut down, like literally all the exchanges get shut down by governments. And so, that also brings up an important topic, which I think is like really, really important for people to just get their fiat on ramp. Like really like at this point, I've said this before, but I think I'm going to kind of more raise this more urgently now. You just want to get as much crypto as you can right now, because you don't know how difficult it's going to be. Like, what if they do try to, cut off those fiat on-ramps? What if they shut down Coinbase, or they shut down Cash App, they shut down Gemini, and like, you can't get your dollars out into crypto. Like, that's a total, like, what this whole thing shows us is that these financial services that you use, they will shut you off for whatever reason. And what if they did that before you could buy more, crypto? And then you're stuck in a situation where there were years and years and years where you knew you should have bought. Oh yeah, maybe later I'll set that account up. Oh, what do I do here? Oh, I need to add my email. I don't want to do that. Like just dumb reasons why people just don't follow through on it. Like, what if they shut it off? Then you'll be really out of luck, because the price will skyrocket, because it'll be so difficult to get. The like premium for getting it will be so high, and that may be where the cutoff is of who are going to be the yes coiners, who's going to be the mo coiners, and who's going to be the no coiners, and maybe that's what it is the cutoff of when they start making it really difficult to use Coinbase. Diana says, maybe you already mentioned this, but what do you think of Janet Yellen saying she wants to regulate crypto? So yeah, I mean, that's exactly what I'm talking about. Like, so they won't be able to regulate like crypto itself, but what they can regulate are the related service businesses that support it. So the exchanges they can regulate, Pretty much anywhere where there's dollars involved, they can regulate. They can't regulate Hex. They can't regulate Ethereum. They can't regulate Uniswap. Because like those things like Hex can't change. Like what? They're going to put regulations like, okay, like you couldn't even implement them because Hex is immutable. It can't be changed. What was launched in December of 2019, like that's as it is forever. Like you can't regulate that. You can't change that. And there's nothing wrong going on there. So like, they wouldn't even have really any grounds. And so it's probably low on their priorities. But the things they can regulate are the fiat on-ramps and the fiat off-ramps. So, like that's why, you don't want to be holding cash when this big crack-up boom happens, and they try to censor the purchase of Bitcoin or Ethereum or like any other crypto you can buy on an exchange. You definitely want to have some before that happens, because there may be a point in time where, in similar fashion, it's literally like the same thing could play out with like GameStop, where the major institution didn't have the thing. They didn't have, they were actively shorting it. So they were selling it. They were like, they didn't have any. Then everyone decides to buy it up. Everyone's buying. Now the people that were relying on that thing not going up in price, now they're screwed. They're like, wait, we can't have a global bank run where everyone ditches their dollars and is only buying Bitcoin. We need to shut it off. Like that's why they'll shut it off. Like they're not going to shut it off because of criminals. Like what do they say? Like 1% of crypto activity is criminal. Like it's nothing. They're not going to shut it off for that. They're going to shut it off because it is in so high demand relative to the assets that they have control of that they're going to want to limit your access to it. And the only way they actually have power to do that is through that fiat on-ramp, the company that you work with to get your crypto. So like Coinbase, Cash App, Gemini. So if they are to regulate, that's where they will. So it is pretty urgent to get your crypto and take possession of it, because you don't want to be in a situation where you did the right thing. You bought the crypto, now it's on Coinbase, and like, oh, Coinbase just shut down withdrawals. Can't withdraw it. You can look at it right there. Who knows if it's actually there. But that's a pretty dangerous situation that totally could happen. Like that's not even like outside the realm of like possibilities. Like that's likely to happen. In this in the big short squeeze of cryptos over the legacy financial assets. That could totally happen. Great question. Pinkyu says, your content is always adored. Thank you. Hey, thanks for... So something that one last thing to kind of cover. So I think that we need to coordinate a global run on the banks. I think that, it's really important to own the assets that you think you own. If you're relying on assets for your retirement or assets for your investments, or to the assets to maintain your lifestyle, to do the things you want to do. Now more than ever, it's become clear that if you actually want that, you have to take possession of it. Like you have to assert that it will happen. And I think that starts with self-custodying all assets. And so I think that we need to call on a massive bank run where we sell all of our stocks, all of our bonds, all of our real world CDs, all of the financial assets that we have in our bank, in our investment advisors, with our brokers, in our 401ks, I think we need to get out of all those assets that we don't own. Like, we don't own them. Like, if it's in your 401k, you don't own it. And you're not first in line. If shit hits the fan, if like the financial institutions that sold you those products, if shit hits the fan, you are not first in line or anywhere near first in line to regain some of that. Like, those assets aren't yours. Like, we'll be lucky if our parents who are retiring in the next couple of years get out with those assets, but those assets are not yours. You do not own them. The assets in your 401k, you do not own. The asset, in your IRA, like, you don't own that. The money in your bank account, you don't own that. Like, everything that, people are just, relying on for their financial health, they have no control over. And there's finally a solution that allows you to take control of your wealth in a way that you own it. Like, it's so important in this world because the institutional powers that, run society, they really don't care about you, in which they shouldn't. Like, why should they, really? Like, why should they care about you? Like, they don't owe you shit. And rather than just like wallowing in the fact that there's, like institutions that, don't give a shit about you, they're going to screw you over. Like, rather than wallowing in that, there's solutions. You can take action, and it's super easy. Like, and so I think that, we need to exit out of all these markets, take all the money out of our bank account, all of our savings, put it into crypto. Literally, like, it true, like, a lot of people get hung up like not knowing what to buy. The three I recommend to anybody: Bitcoin, Ethereum, and Hex. Like, those three, you can like, where Bitcoin is kind of like, your savings that, yeah, you might be willing to spend if you're in a crunch. Hopefully, if you're going to spend it, there's every 4 years, there's really good opportunities to sell. Every 4 years, there's good opportunities to buy. It's a good one to be at, to saving in. It's like this, the industry leader, least risky one. So like that one's a strong one to hold. Ethereum's another one that's strong one to hold, because by being an Ethereum, you now have access to all these other financial markets. You can, if you need to borrow money, you can post Ethereum as collateral on chain and get a loan. Like, you can earn money by lending out your assets all on chain. There's risk in that, but like, there's anything you would go to your bank to do, you can now do on Ethereum. And then Hex is like, fits in that category as like a long-term savings, like a high interest long-term savings account, kind of like a certificate of deposit, or as like a retirement account, whereas an alternative to a 401k, where you're agreeing not to sell those assets for a set number of years in order to gain a tax benefit. In Hex, you're time locking your Hex and earning high interest that compounds over that period of time, and you're earning it, because you agreed to lock up your funds, and it helped support the price for other people that didn't lock the funds. So they're paying you to support the price. And so, like, between those three alternatives, like Bitcoin, kind of like, your infrequent spending crypto. Like, if you like the money that you're just going to be spending, like, just don't put it in crypto to start with, but everything else between like, like Bitcoin is like a savings account that, like, yeah, you can sell if you need to, like, no problem, just try to buy some more back. And then Ethereum, which is kind of like unlocks, financial services to you, and is just like, a good investment. Because like Ethereum has its own market cycle where sometimes the price goes up, sometimes it goes down. So like, there's always good times to buy, and there's other good times to sell. And then Hex is kind of like that bedrock 15-year max length stake, long-term savings financial product that, you can treat as like a retirement account. Like, between those things, like, that really covers you for everything that you might need. Between that and, just like always improving your skills and your value in the marketplace, so you can like always have income no matter what is going on. You want to be demanded. Like, you want to have the skills that people with the things that you want will pay you in those things to do for them. And so, like, between just like accumulating, Bitcoin, Ethereum, and Hex, and just improving yourself and improving your prospects for being able to like serve others, literally, like, you will be able to conquer anything that happens in this world. And you won't be, hoping that like, the people that you entrusted your finances to are going to like run off with them or not be able to deliver on what they said they would, or they're not going to like, prevent you from being able to sell something that you thought you owned. So let's see if there's any more questions in the chat, and then we'll probably start wrapping up here. If that were to happen, would it be hard to exchange crypto for dollars if you needed to? Yeah, it very well could be, but it'll be harder to go from dollars to crypto than crypto to dollars, because if it's really hard to get into crypto, that means that there's going to be a lot of people looking for ways outside of those channels. So you could probably find a cash buyer. Like if that was to really happen, like someone would be willing to pay you cash. But ideally in that scenario, maybe that scenario would only happen at a time where like, you could pay someone in crypto. So rather than needing the dollars, maybe the person that you're going to pay would be willing to accept the crypto. So, but if it's hard to buy, that actually means that you as someone that's trying to sell, it's actually a good thing for you. Even though it may be hard to find a place to sell it like Coinbase, but you may be able to, you would be able to find a seller, for sure. So thanks for joining me, everybody. If you have any questions, leave them in the comments. I'll try to get back to them. Stay safe out there. Really think about what I said about, the whole concept of ownership of these assets and like what the risks are when you don't own them. As always, if you need help with any of this stuff, reach out, participate in the discussion. Thanks for joining. We'll talk to y'all soon. Bye.